about stocks this week. Markets at a 4-month high. Will the rally continue? Pharma stocks in focus this week. We picked the best bets for you. And Ambrish Baliga reviews his portfolio. Welcome to All About Stocks, a show specifically meant for long-term retail investors. We've had a very good week at the markets. We are back at 20,000, a level that had seemed elusive for a little while. Let's find out where the market is expected to go from here and what you should be doing with your stocks. This week, we're also going to take a very close look at the pharma sector and consumption stocks. We'll find out which are the best bets for you right now. We'll also answer some of your questions and plan portfolios for you. There's an email ID at the bottom of your screen. Send in any question you might have about your stocks. Now, I know you were in the office all week, so Ajay is here with an update on the markets. Ajay, Sensex at 20,000, IIP numbers looking stronger. Take us through what happened.
Thanks for that, Faye. Well, the party in the Indian markets continued this week. We saw almost 2.5% being added on the Nifty and close to 3% on the Bank Nifty. Indicating that FIIs have been continuous buyers in the market. So we're talking about almost $500 million worth of equities being bought by FIIs this week, and that has taken the Indian markets almost to 4-month highs. And we also saw Nifty negotiating with the 6100 mark for at least Thursday and Friday. We also saw earnings support the market quite a lot, but it was also the strong industrial productivity data which aided the rally. So it landed at around 2.5% for the month of March, which was a third straight month of advance. So this is giving a lot of sentiment booster into the market. Of course, some of the Nifty components are hitting at 52-week highs. Maruti on weaker yen, ITC on fund buying, Mahindra & Mahindra on expectations of a normal monsoon, and Lupin, of course, on a strong set of numbers. There were some weak pockets as well. Coal India has been going down, along with the Sun Pharma, which has already had its good spell of rally. But net, a large part of the Nifty components were seen gaining. Stocks like Tata Motors, Hindalco, Indus, and all of them added 8 to 10% this week.
All right, Ajay, thank you for that information. Joining us now in the studio is Ambrish Baliga, who joins us to help us understand what's going on in the market and also help us pick the right stocks. Ambrish, thank you so much for joining us in the studio. It's always a pleasure to have you here with us. Now, like Ajay was telling us, we've seen a wonderful run-up in the market.
Right.
We're at 6100 right now. This is largely on the back of FII movement. Now,
Absolutely.
given the fact that we have so much political uncertainty in the centre, we've seen Parliament stall again this week. How much do you expect this run-up to continue? Or is this something that we're going to see fade out maybe in the next couple of weeks?
No, this run-up can continue for a while longer because liquidity flows are there. But for it to continue much longer, you require fundamentals to back it up. And that doesn't seem to be in place right now, especially clearly looking at the way the political issues are coming up, uncertainty out there, and elections possibly could be earlier than what we're expecting. So in this sort of a scenario, I don't expect FIIs to continue pumping in money because you don't know as to whether you'll have the reforms continuing, what sort of a new government would be formed, how strong it would be. We don't have any idea, as of now. So looking at that, possibly over the next couple of weeks, you may see the FII flows tapering off. And along with that, possibly the market should correct.
Well, we have seen March IIP data come in on Friday, where we saw it improve.
Right.
Voices from the governments are saying that growth has bottomed out. It's going to get better from here on. Is this something you agree with? Do you believe our macro numbers are going to continuously improve from here?
I just hope that's true. And I just hope it would improve going ahead. But I think it's a bit too early. You can't see possibly 1 or 2 months figures and decide that yes, I think it's bottomed out. I think it needs to be confirmed by the next couple of months, because as of now I still don't see green shoots at the grassroots levels, because when you speak to people at the ground level, you still see that there's a major slowdown. Retail, there's a slowdown. Consumers, you look at vehicle sales, there's a slowdown. So I really don't see green shoots, and because of which I don't see the investment cycle really taking off. I think that's still some time away. So till I see those, you really can't. I won't say that things should improve going ahead.
Well, let's Let's talk about what we should do then as retail investors in a market like this.
Right.
It does seem like an optimistic market. It does seem like it's moving up. Should we be just watching and waiting at this point? Should we be getting excited by what we're seeing? How would you advise us to approach
No,
this
I don't
market?
think one should be buying at this point of time, unless you're a trader, unless you're a trend follower, then possibly follow the trend and ride that for a while. But if you're an investor and you're making good profits at this point of time, I mean, in case you're making good profits, possibly I think it's time to book out to a certain extent. Because in case, I mean, going ahead, like I said, if we see a correction, it's better to be on cash to a certain extent by exiting right now.
We have a question from Himanshu Sharma who's written in 250 shares of Ranbaxy, which he bought at 393 rupees. He wants to know if you should hold that stock. It ended the week on Friday at 444. Now, Ranbaxy's earnings disappointed the market. Net profits were down 90%. Amrish, what should he be doing with Ranbaxy? And given those earnings that we saw, what's your call on that company?
See, these earnings were pathetic because of the base effect and exclusivity which they enjoyed last year. But from whatever we understand, things should look up further for Ranbaxy from here on, if you're talking of the next couple of quarters. So post these results, we have seen some correction. I don't see it correcting much further from here. I mean, the way I see it is possibly the bottom should be closer to about 410, 415 levels. So I think he should just hold on since he's an investor.
Okay, since he's currently making a profit, how much more can he expect from Ranbaxy though?
Ranbaxy, if he holds on possibly for the next 12 months or so, I think he should look at levels of about 520, 530.
Alright, so since we're on the pharma sector, there are a couple of other stocks we must talk about. Apart from Ranbaxy, we saw other pharma stocks in focus. Lupin surprised the street with a very impressive net profit, surging 162%. Sun Pharma hit fresh record highs this week. It entered the 1 lakh crore market cap club as well. What's your outlook on the pharma sector going forward? We saw it be a darling of investors through this entire choppy time. What happens now?
Pharma should still continue doing well, at least in the foreseeable future. I mean, if you're talking of FY15, FY16, I think it should still continue doing well. But the stock selection would change. I mean, earlier, the last 10 years, if you talked about the top 3 pharma stocks, it would have been Ranbaxy, which just talked, Cipla and Dr. Reddy. Now I would say it would be Dr. Reddy's, Sun Pharma and Lupin.
Okay, Dr. Reddy, Sun Pharma and Lupin. In fact, we have a question now from Vijay Haran, who's written in. He has 40 shares of Cipla, which you just mentioned. He bought it at 398. He wants to know what the future prospects of the company are. Will it give decent returns over the next 3 years? Cipla in particular?
Cipla, I'm not negative. But like I said, I'm more positive on Sun Pharma, Lupin and Dr. Reddy's. But a stock like Cipla, I mean, if he can hold on for the next 2 to 3 years, should give him levels of, say, about 530, 540.
He also wants to add one more pharma stock to his portfolio. He sent us a list. He has Lupin, Aurobindo Pharma, Ipca Labs for us to choose from. Which one would you choose?
Lupin. So that's there in one of those choices he has made. So.
Lupin is the choice for you. Amrish there telling you which of those pharma stocks you should be picking up and the fact that you need to be selective when you're looking at pharma. We have a portfolio to look at on this segment. Well, Sai Kiran has written in. He says he has the following companies and he's a long-term investor. He wants to hold on for the next 2 to 4 years. He plans to invest another 1 lakh rupees in equities. So he wants to know which stocks he should hold on to on this particular portfolio. He has 22 shares of BHEL, which he bought at 334. It's a little below 200 this week. BHEL disappointing a lot of investors. How long do you think it's going to be before we see it turn around?
Like I was saying earlier, once the investment cycle starts improving, that's the time you'll have stocks like BHEL, GMR, L&T performing. So right now, it seems we are more or less at the bottom, but I don't know when it will start moving up. So since he's already bought these shares, I think he should just hold on for the time being. Since he's talking of the next 3 to 5 years, he should just hold on BHEL and GMR.
Alright, GMR Infra is the next on his list.
Right.
He has 205 shares. Hold on as well then.
Absolutely. But I mean, like again, if you're talking of this next stock on his list, IVRCL, I think that's one stock where I really don't see too much of an upside. It's more of a trader's sort of a stock. So in case he sees levels of close to about 30, 35, I think that's the time to possibly exit.
Alright, the next on his list is HDIL, which he bought at 85 rupees. This company has had its fair share of issues as well. Should he hold on to it?
No, I think even at these levels, he should possibly exit HDIL because my outlook on real estate sector is negative. It's bearish. And HDIL would be one of the last stocks to be actually held in the portfolio. If one still wants to hold on to a stock, a property stock in the portfolio, it should be DLF and not HDIL.
All right, 101 shares of JP Associates, which he bought again at 85 rupees. What should he do with that stock?
JP Associates, I think he should just hold on because I think the next trigger for that stock is the cement sale. Again, we've been hearing rumors, on and off. But once that comes through, I think you could see levels of closer to 100, 110 for the stock.
Sterlite is also on his list, which he bought at 107 rupees. He's making a small profit here. Should he continue and hope for more?
I think this is one stock possibly can just hold on. Again, I'll not say that hold on for the next 3 to 5 years, but if he holds on for the next year to 15 months, and in case he gets levels of closer to say about 125, 130, I think those are the levels where he should be exiting.
He has 18 shares of Tata Steel, which he bought at 475. Tata Steel is part of your portfolio
right,
as well.
Absolutely,
so
absolutely.
You're obviously going to ask him to hold on to it?
Yeah, I think he should just hold on to it and possibly buy more. Once it starts moving up, not right now, but once it starts moving up, moves beyond that 350 levels, I think that's the time to again buy fresh.
Last on his list is Care Rating, which he bought at 984. That stock's also cutting him down a little bit over there. What should he be doing with that?
Care Rating, again, I think it's a very long-term sort of holding, which should be there in the portfolio. And I think he should just hold on and not really look at selling even at the end of 3 or 5 years.
Well, I'm a little worried about his portfolio. If we look at it together,
right.
It doesn't have banking, it doesn't have pharma. There seems to be a lot of sectors that are missing. There's a
right.
large infrastructure theme that's running through it. Do you want him to diversify a little bit?
I think he should start looking at oil marketing companies. I think that's one sector which will really do extremely well because subsidy is out of the way. And now people start talking of the assets which these companies have and asset replacement cost and things like that. So I think he should look at the OMCs.
Can you give him a couple of names?
I think he should look at buying HPCL. Reliance is not there in his portfolio. I think he should look at buying Reliance.
All right. So add a couple of stocks to your portfolio to round it off a little better, but you seem to be on track. Quick break. On the other side, Amrish will review his own portfolio. We'll also discuss the outlook on consumption stocks going forward. Don't go anywhere. Welcome back. You're watching All About Stocks on ET Now. Thank you for staying with us. Amrish Balika is with us in the studio. For those of you who just tuned in, this is a show for long-term retail investors. The idea is to find the right stocks in our stock market that can make you rich in the long term. Now it's time for us to review Amrish Balika's portfolio. This was a portfolio designed on the 11th of January. The idea is to invest money for the long term and see how it goes. So every time Amrish comes back into the studio, we review the portfolio with him. I'm first going to give you a list of all the stocks he's picked on this portfolio. Reliance Industries, Larsen & Toubro, Tata Steel, Coal India, BEML, NMDC, Punj Lloyd, Indraprastha Gas, Mahindra Holidays, Tishman Pharma. Now, this portfolio is giving us an overall loss of 14.72%. That's almost 15%. At the same time, the Nifty is up about 2%. Amrish, are you disappointed?
Disappointed, no doubt. But then I would say that the pedigree of the stocks which I've chosen are impeccable. So I'm not really worried because I picked up these stocks from a longer term perspective, 3 to 5 years. So whether it goes up or down 10-15% in 3 to 6 months or even say possibly 9 months, I'll not be so worried. As long as I believe that these companies and these sectors will perform well in the longer term.
Well, when we designed this portfolio, I'd asked you about these companies.
Right.
Reliance Industries, L&T, Tata Steel, Coal India. These are big companies, these are big guys.
Absolutely.
At what point or what trigger do you expect them to start turning around?
See, when we start seeing the investment cycle starting in India, which again, like I said,
Will happen with interest rates being cut down?
interest rates being cut, elections going through well, and with a proper government, with a strong government at the center which can deliver. I think that's when you will have all these sectors actually performing.
Now, like we said, overall loss of nearly 15%. Do you
Right.
want to make some changes in this portfolio?
I would make some changes. That's because we had deployed all the cash which we had. So I would be exiting Indraprastha Gas, which is one of the better performers. If I had the cash in the portfolio, possibly I wouldn't have sold that now. But since I require cash to deploy in the stocks which have cracked quite a lot, where I still see a very decent up move from here, from a longer term perspective, and I see those performing better than Indraprastha Gas from the current levels.
Okay.
So I would surely increase my exposure by 2% in BEML, by 2% in NMDC, and 2% in Dishman Pharma.
All right, we're making a small change there. I'm going to give you a quick recap of the stocks Amrish has picked for us. Reliance Industries, Larsen & Toubro, Tata Steel, Coal India, BEML, NMDC, Punj Lloyd, Mahindra Holidays and Dishman Pharma. You can obviously send in any questions you have about that portfolio to the email ID at the bottom of your screen. We have a question that's come in from Vijay Kumar. He has 9 shares of Asian Paints and he also has 186 shares of Dabur. He wants to know if he should be holding on to these two stocks. Now, we've seen consumer stocks be in focus over the last 2 weeks. There are a lot of conflicting reports that are coming out. HUL on one hand seeming very positive. On the other hand, we saw a lot of the discretionary spending stocks come in with very bad numbers. I'm going to bring in Ajay first so he can give us a view on this entire sector and then we'll answer Vijay's question. Ajay, tell us what's going on with these stocks.
In the middle of this earning heavy week, we saw 2 companies come out with earnings, and these companies, Asian Paints and Jubilant, are seen as somewhat a barometer of consumption theme in the market, and both actually disappointed massively as far as earnings are concerned. The volume growth in Asian Paints fell to almost 2% compared to say 13-12% thereabouts, which it clocks on a regular basis. Same is the case with the Jubilant Foodworks, which serves pizzas in the Indian market. They actually saw their same-store sales fall to low single digit of 7.5% or thereabout from 16%. So this is in a way casting a doubt that the consumption theme in the Indian market has definitely taken a hit. But at the lower levels, of course, valuations start supporting these stocks, and we saw some buying also come in. But definitely the market participants have, they have taken a note of these 2 earnings surely.
All right, Ajay, thank you for that information. Asian Paints in particular, numbers were disappointing.
Right.
Like Ajay was telling us, it's sorts of, it's led the market to believe that maybe discretionary spending is coming down as well. What's your view on Asian Paints and what would you like him to do?
Asian Paints, again, the short term, we could see some correction because the numbers have disappointed. Whereas in the longer term, I would still continue holding on because end of the day, the sector, I see a very good long-term story. Margins will continue to be strong, and if you leave aside possibly the next couple of quarters, you will see the growth figures which we saw in the recent past again coming back.
What should Vijay do then for Asian Paints? Should he be holding on to it?
Depends. If he is a short-term investor who's looking at nothing beyond the next 3 months or 6 months, I think he should exit. But if he sees life beyond the next 2 or 3 years, I think he should just hold on.
Just hold on. He also has Dabur, which he bought at 149. He's making about a 20 rupee profit on it. Hold on to that as well.
Dabur, I think he could book out to a certain extent. We had extremely good move in Dabur in the last 6 months. And I think he should possibly look at investing into ITC once it corrects. I think he should enter ITC closer to about 320, 325 levels.
Can you give us your view on consumption right now?
Consumption has slowed down, but will it continue slowing down for the next couple of years? I don't think so, because India, you have the population growing, you have the earning population growing. So whatever we are seeing right now would be temporary. But despite saying that, I would still say that because of the slowing consumption, you will have that effect on the results of the consumer companies over the next possibly 2 to 3 quarters. And because of that, you will see these stocks correcting. I think that should be the time to actually go out and start buying, because the long-term story is still there.
If you were to help us pick certain pockets, like you were talking about,
Right.
within the consumption theme, where would you like us to put our money? Is it ITC? You mentioned ITC a little while ago.
Yes, I would possibly pick up ITC. That's my top pick. And after that, I would surely look at a stock like Talwalkar, which I have recommended in the past on your show. And again, looking at the latest results in line with what I was expecting, 35% sort of a growth, I think that growth will continue at least for the next 2 to 3 years.
All right, time for a very quick break on the show. When we come back, stocks we're going to talk about Maruti Suzuki, Bharti Airtel and TCS. Don't go anywhere. Welcome back. You're watching All About Stocks on ET Now. Thank you so much for staying with us. Amrish Balika is still with us, helping us with our stocks investments. Amrish, it's time to pull up your report card.
Right.
Amrish had recommended Maruti Suzuki when it was trading at 990 rupees in December 2011 on this show with a target of 1400. Now, it hit that target. We booked out 50% profits on Amrish's instructions. Now, it's gone well past that. It's trading at about 1730 almost.
Right.
What would you recommend we do? First of all, thank you for that strong recommendation. What would you recommend we do now?
I wish my portfolio also performed similarly. Anyway, at these levels, I would say book out 100%, because auto sales are slowing down. The stock has moved up because of the way the yen has moved. But then I think auto sales will finally come to hit it going ahead. So I think at these levels, the risk-reward ratio is not really favorable. So I think one should exit.
All right, exit Maruti Suzuki with that handsome profit if you got in when you heard the recommendation on this show. I want to very quickly ask you about the rest of the auto stocks. Those numbers have been so bad. Mahindra and Mahindra, Tata Motors, what should we be doing?
I think at these levels, one should book out to a certain extent. Ashok Leyland came out with the results. Even that was pathetic. Should exit.
Should exit.
Yes.
Should be exiting auto stocks. We have time to take one more question on the show. I'm going to very quickly slip it in. Devrajan has written in. He has a portfolio. He wants to hold on for the next 2 to 3 years. I'm going to take this very quickly. 40 shares of Bharti Airtel bought at 300. More legal trouble for that company. What should he be doing?
I think he should book out at this point of time.
Okay. He also has ITC bought at 280. So he's making a nice profit. You did say hold on to ITC.
Absolutely.
Should he be taking anything off the table?
I think he should just hold on since he's a long-term investor.
Okay. Reliance Power is the next on his list, bought at 280 rupees. Any hope there?
Absolutely. I think there is a lot of hope now for the ADAG pack. Reliance Communication has moved up, so I think this could be the next one.
Rolta bought at 88 rupees. Is that the best bet for him? Should he be holding on to it?
Rolta, I think he should book out at this point of time.
Okay. Get out of TCS. 1196. TCS has done very well for him on that portfolio. Should he be holding on to it?
This is a long-term hold. I think that's the only stock other than HCL Tech which one should hold in the IT sector.
All right, positive on TCS. United Phosphorus 132. That's what he bought it at. Hold on as well.
This is also a hold because it just started moving up, and the way I see it is he should get levels of about 190, 200.
And last on his list is Kane India. He bought it at 322 rupees. What's your call?
Kane also is a hold for me.
Okay, Kane is a hold for you. Remember, if you have questions for Amrish Balika, send them to us. Email ID is at the bottom of your screen. We'll also be glad to email you a copy of his portfolio. Amrish, thank you so much for joining us on this show. That's a wrap on this episode of All About Stocks. Feel free to write in to us. Thanks for watching.